Good morning, everyone. My name is Dennis Trainor, and I'm the chair of the Joint Authority and Canal Corporation's Audit Committee. Welcome members John Koelmel, Michael Cusick, Louis Warren Jr., and Laurie Wheelock. This is a scheduled committee meeting which has been duly noticed as required by the Open Meetings Law. I now call this regular meeting to order. We begin with the adoption of the agenda. I ask the committee members.
So moved.
A second. All in favor?
Aye.
All opposed? Motion carries. The next portion of the meeting, we held an executive session for approximately 30 minutes. I ask for a motion to conduct an executive session to discuss the financial and credit history of the particular corporation pursuant to section 105F of the Public Officers Law.
So moved.
Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. We're now in executive session. Okay, I'd like to ask for a motion to resume the meeting in open session.
So moved.
Second.
All in favor?
Aye.
Aye.
Any opposed? Motion carries. There were no votes taken during executive session. I'll now ask Salman Ali, Senior Vice President, Internal Audit, to present the updates and next item.
Clicker. Good morning. Good morning,
morning.
trustees,
Morning.
NYPA colleagues, member of the public. Pleased to be here. My name is Salman Ali, SVP Internal Audit. This morning, I'll be providing an update on the 2025 audit results as well as the themes, and then we'll get into the review of the 2026 proposed audit plan and what we plan on doing for this coming year. Just to kind of give you some perspective on the 2025 audit plan, I'm pleased to share that we've completed 100% of our plan. Our final report was issued last week, well ahead of our March end deadline. So I want to give a big kudos to our internal audit staff and management to getting an ambitious plan done well ahead of time. We completed 42 engagements with strong utilization at 75%. We perform more deeper analytics and a more complex engagement. Our cycle times, and the cycle time is the length of time each audit on average takes, that was slightly extended. However, that was by intention because we did have more analytics work. We did do more complex engagements, but we completed our audit well ahead of schedule. It's just that some of the reviews took longer time because we did more deeper reviews and we applied more analytics this year to bring in more use cases and build those with our partners.
So you could have done even more since you were done early. You really kind of sandbagged, in other words, right? I mean, we could have been even more secure.
Well, we started our 2026 plan ahead.
Oh, okay.
Yeah, so we were able to get some things, planning and other HR matters like our employee.
No, that's terrific. All
yeah.
kidding aside, well done.
Yeah, thank you. Our QA program remains on track. That's a big part of how we ensure our work papers are of best standards or following the standards. So with a few commitments which are progressing well ahead of schedule. I'll jump into the thematic scorecard. On observation, we are seeing continued improvement in the control environment. The closure of items remains strong across NYPA and EH&S and canals. We have seen a decline in high risk and medium risk observation. EH&S, environmental health and safety, that follows a similar pattern with all 2024 items closed and 2025 items progressing smoothly. And I'll provide some more context in terms of some of the thematic strengths we've seen when we talk with observation. But taking together, these are really good indicators of a strong, proactive, and a well-managed control environment. So wanted to also then thank management in terms of the collaboration effort not seeing any extensions, having items closed on time. That was a good effort and a good partnership with senior leadership. Building on that, we stepped back and looked across all audit results to identify what this really tells us, right? And at an enterprise level. So I'll walk through, the strengths observed from these audits. What encouraging is that across audit, we're seeing a consistent improvement in 3 areas. One is the control environment. Like I mentioned, fewer high-risk observation. We have seen remediation discipline issues are being addressed earlier with no extensions, and the engagement with management, like I mentioned, strong engagement with the first, second, and third line with the participation from IBC and risk. We've partnered well with Alexis and Adam's group and Dolly, I see here in the room as well, to really kind of collaborate on issues and what they're seeing, what we're seeing. We've adopted the enterprise risk framework to really align on how we dimension some of these issues. So we're all on the same page in terms of how we look at issues and their criticality and how management is doing their own self-assessment and reporting the issues out. I'll pause there for any questions. Okay. So I'll jump into insights, right? Opportunities I would call these, right? Before I close on 2025, I want to share what the data is telling us at an enterprise level. These themes are not surprising. They reflect where NYPA is in its growth in its growth journey. What's more important is that management has already made strong progress on these items. And these themes have directly informed us on how we shape our audit plan. So the first theme was around data management reporting. This is an initiative, which is enterprise initiative on data governance. We saw, opportunities on data consistency, quality, and governance, particularly around data reconciliation, forecasting, and reporting processes. So what's been done? So when we identify these issues, we worked with management. Management has made strong progress towards formalizing a data governance program, and that's really driving consistency in terms of how we are looking at how we're seeing the improvements in data. So we have seen as the audit plan progressed, we did see some of those improvements in reconciliations, for example, in customer billing, data quality controls and standardization, automation of data feeds and reporting, and increased focus on centralized data and transparency. So overall direction is positive. Now it's about scaling and embedding this as a consistent practice. So we're going to continue to look at data governance as it further matures. But this is, as the organization grows, as you implement new systems, as the environment gets complex with the ERP and other systems, these are some of the things data is obviously, in my past experience, it's a very complex area because you have to figure out where the data is, where it resides, how do business owners declare that they have this critical data. So it's always kind of a process where you are continuously applying controls and making sure business is following the data governance standards. So that was really, theme number one. We've, like I said, we've seen some strong progress in terms of some of the recommendations we had and them being addressed, and then kind of making sure we're monitoring them going forward. The second theme was around vendor and contract management. To just give some background, NYPA has a large supplier base spanning across, major capital project, energy vendors, O&M vendors. Management across organization recognizes the need for consistency in vendor oversight, invoicing controls, and contract enforcement. And these are items consistent with what we expect at NYPA scale. So what really matters here is as management is actively closing these items. So when we did look at some of these areas, right, we did see progress in performance monitoring, so KPIs and KRIs on vendor governance, invoice review and documentation rigor. So that's something, we work with John and his team where they were able to implement, as we shared these implement processes to enhance that, standardized reporting and governance routines, enhancing compliance monitoring. So when we look at some of these invoices and adherence to the requirements for the SLAs, make sure those are being monitored. So that has been enhanced. And lastly, improving ownership and accountability over vendor oversight. Most of these gaps are either closed or actively tracked to completion. We are looking at these from a ongoing perspective. So when we do each audit, we look at vendor management as one of the key areas of focus. For example, we had conflict of interest disclosures where gap was identified and has since been addressed. Change order governance was another area where scope changes were not consistently reviewed, but management has since implemented independent validation before approval. So it's now more about sustaining consistency across all vendor and projects and continuing to strengthen the change order and cost governance process. Lastly, theme number 3, EH&S. I want to first, this area has seen massive improvement, right? So since prior years where we had a couple of high-risk observation with Steve and his leadership, we've seen a clear momentum. We did see some items within EH&S, but most of these gaps have been closed or are in progress of being addressed with strong ownership under Steve and his leadership. So what we saw in our results was opportunities in inspection routines, consistency in training and emergency preparedness and documentation. So these are from H&S perspective, right? We didn't note any big violation or any issues with employee or their safety. Is more just making sure we're being more proactive to have some of these routines in place. So what's been done? We've seen strong improvement in inspection program and compliance visibility, training program implementation and ownership. That continues to be an area of focus because it ultimately comes down to training. When it comes down to EH&S, are people aware of some of the requirements and some of the standards and the protocols? So emergency protocols, making sure those are being adhered to. So what really remains is sustaining consistency across sites, embedding these practices into day-to-day operations, and making sure these items are being operationalized at the sites where they are most needed. So from organizational perspective, some of the results we see is obviously enhanced safety and safety culture, regulatory trust, improved decision making when it comes down to data, and informed and forward-looking strategic planning, and then better managing our costs and ensuring we have reduced operational disruptions.
So what do you attribute our overall improvement and the very positive trend there?
I would say I think it's main contribution factors, and when we do identify these issues, management is very receptive to addressing this. Like we discussed earlier, we identified the issue, it was remediated. I think that's one thing is where management takes these items seriously. They show ownership and accountability for these items. Some of these items, even when we say these are low risk observation, they were like, we want to get these resolved right away. So I think, I would say management and their reception to these issues to get these resolved in a timely manner and not have them extend out for a period of time. I think that would be the major contribution factor.
So you've been a couple of years you've been with us now?
Yeah, about 1.5 years. Yes.
1.5 years. I mean, how you reflect on what you saw versus where we are. I mean, just give us bigger picture.
Big picture, yeah. I mean, I would say definitely a risk and control culture is very strong here. I would say, with enterprise risk, with IBC, I think with the risk liaison program, with our audit liaison program, there's a big focus on getting things done on a timely manner. In the past, I've seen where I've been in heavily regulated banking institution where, there was a lot of regulatory pressure and environment was more complex. I would say, in the energy industry, right? You don't have such complex models, right? We do have controls in place and risk and mitigation in place. But, from my perspective, it's definitely a very mature control culture.
Very great.
This slide reflects our community governance. These are required communications. From our perspective, all required CAE communication under the IA standards have been fulfilled for 2025. These reflect our commitment to independence, transparency, accountability to this committee. So as a CAE, I confirm this personally, our independence, resources, and quality processes are sound, and we provided details in the appendix. So that concludes my 2025 update. I'm proud of what we delivered as a team, 100% plan completion, a strengthening control environment, and a team that continues to grow. I will now turn over to the team accomplishments. I just want to kind of showcase what our team has done. We have a great staff, a great set of leaders somewhere in the room as well. We have folks which are driven by having certification. So 80% of our staff has one or more certification. We discussed in the last committee, we've elevated some of the senior managers to people managers to have more succession planning within the department. We engage in a few culture events for the workforce site reviews, which we assisted Sandra and team. We did some site visits to Soulful Synergy and Luana's site. That was a good way to kind of get there on the sites. As a team, we have completed our agile maturity assessment. We participated in Gartner and other conferences in AI, and then we completed an AI-wide training in 2025 to upskill our team.
So the team you have today, we talked about open seats in the past. Where is the team? What's our complement, internal, external? You were trying to bring more internal, minimize Deloitte's involvement, things like that.
Yeah. We are
big picture. Where are you today?
Yeah, we're fully staffed. We're fully staffed for the roles we have. Knock on wood, we just had one attrition in 2025, so we are hiring for that position. That's, I think kudos to the culture we've developed as a department, as a team. And we have the right balance. I feel like the resources we have, we're at about 22 folks right now. And then we are supplementing that with Deloitte. And that's really where we really need the expertise, such as cyber,
right,
EHS, and data and AI. So we're I think full steam ahead. And this is, I think, where we have the right mix of outside and internal resources.
Okay, great.
So the 2026 plan was built on everything 2025 taught us, what we learned, what we saw, and how management responded, and all that shaped what you see today. So I'll start with how we built the plan. We took a structured top-down, bottoms-up approach. As we develop our plan, we look at internal audit results, prior audit coverage, internal enterprise risk insights, and also, most importantly, stakeholder input and collaboration and what we hear from management. So we have a lot of discussion with management as we develop this plan. The process really starts in October, November, and then we concluded it during this time when this comes for approval. We also looked at external perspective from Deloitte, Gartner, and LPPC to ensure we align with industry best practice and what really is going on in the energy spectrum. From there, we risk assess our audit universe. Audit universe are entities or areas we look at as part of our broader assessment, and we prioritize accordingly. This approach ensures the plan is comprehensive and also forward-looking. And I know we've walked this in the past. The process is really I would say the key highlight is, in like prior years, we follow a risk-based approach. The audit universe, like I said, consists of 57 auditable entities across NYPA canals, and we assess each entity against enterprise risk and adjust for organizational changes. And then we follow a risk-based audit cycle approach based on our entity and how often we audit these areas based on the risk rating of high, medium, and low. So at a high level, the 2026 plan is designed to provide comprehensive risk-based coverage aligned to NYPA's strategic priorities and top enterprise risk. A key focus is oversight of major transformation projects like the new ERP platform, renewable energy initiatives, and nuclear, and where we see execution risk as highest. We've also increased focus on EH&S, regulatory compliance, cyber, and operational risk, alongside expanding continuous auditing, data-driven monitoring. So the plan balances assurance, advisory, and forward-looking capabilities. This slide showcases at a high level, how we structured a plan, and we've included the detailed plan in the appendix which we had shared. So we've structured around a few thematic areas. First, critical infrastructure and asset operations, ensuring reliability and resilience. Second, strategic programs and enterprise transformation, focused on governance and execution of risk across major initiatives. Third, renewable energy and NIRAD, supporting clean energy delivery. Financial integrity and revenue assurance, strengthening financial controls. And then fifth, enterprise technology and cybersecurity, safeguarding critical systems. And finally, EH&S and regulatory compliance. And we're continuing to enhance our continuous auditing and monitoring processes, and looking at various technologies to help augment the way we look at data from these reviews. So these themes ensure alignment to both current and future risk directions, and this gives us a comprehensive coverage of NYPA's risk landscape. Just quickly highlight on just how the next few slides are going to be how we slice and dice the plan and ensure they're aligned with enterprise risk and our strategic initiatives. So approximately 70% of our plan is focused on audits, exceeding our benchmark levels. We've increased assessment work to support NYPA's transformation initiative, such as Project Illuminate, Project Hub, and compared to prior years, the mix reflects a deliberate shift towards deeper assurance while still enabling the business where needed. So we're about, last year we had about 42 reviews. This year we're about the same at 43 reviews.
Well, you're done early, so it's good to see you're doing a little bit more.
Yeah, that's the one audit.
Yeah.
Alignment to strategy. So Vision 2030 renewed is where we really benchmark our plan against. So plan is directly aligned with the NYPA's vision and priorities. We explicitly mapped our audit plan to NYPA's 2030 priorities. This includes clean energy and sustainability with coverage over EH&S emissions and regulatory standards, transmission and infrastructure through asset and capital delivery audits, customer and decarbonization goals through review of revenue, metering, and third-party risk. And then innovation and digital enablement with focus on SAP, cybersecurity, and IT resilience. And finally, the canal system revitalization with targeted operational and compliance coverage of the canal infrastructure. So I would, just say, our audit is not separate, is integrated into this strategy. Enterprise risk alignment, our coverage is aligned to enterprise risk and evolving risk appetite. We also align the plan to NYPA's enterprise risk framework, and then focus our coverage on critical infrastructure, financial capacity, and strategic investment, which represent key enterprise risk. And the plan really adapts, I would say, to as the risk evolves and as more things come on emerging risk, we look at that, and our plan is receptive to any changes. Resource plan and allocation. I know, John, you asked, Chairman, you asked before. The plan is fully resourced. This this is a strong with strong utilization and target co-sourcing. From a resources perspective, the plan equates to about 34,000 hours. We've supplemented some of the hours, like I said before, with targeted core sourcing, primarily around specialized areas such as cybersecurity and analytics. Our plan utilization is at 78% above benchmark, reflecting efficient allocation of resources. So in summary, we're fully resourced to deliver with no execution risk from a resourcing standpoint. I wanted to kind of spend some time on our strategic initiative. I know we've talked about this in the prior meeting, but this is really something which happens in a background. I wanted to kind of share with the committee on how we're kind of making sure we're best in class as a function. So our focus is primarily from our strategy perspective, divided into 4 areas: innovation, people, align, assurance, reporting, and communication. So for innovation, we built a foundational AI prompt library. I think about this as a set of instructions on how the team looks at AI and is able to use the prompts to augment the work. We've launched upskilling across the team on AI and data analytics, and we've moved from experimentation to really using the capability. From a people development perspective, we established a center of excellence model, which went into place about a month ago. As part of the center of excellence, we've assigned specialists focused on specialized areas to our senior auditors. So we have auditors who are owning cybersecurity, EH&S, third party, and really building the depth where NYPA risk our grade is. So these are folks within the team who are really owning as a go-to person for cyber. So if somebody has, say, on a review, they have a question on EH&S, they can go to this person and they can kind of find the answer. So they're really kind of keeping a tab in the organization, talking to stakeholders, and bringing some of that knowledge back to our department. The CEO model brings specialized expertise directly into our audits, and we've enhanced skills. We have enhanced our skills framework to align with the digital needs. So we did a skill gap in assessments through Gartner, and we will identify some areas. And now we're actioning some of those areas to bring in the training and the expertise needed for our staff. Align assurance, I think I may have mentioned, we fully integrated internal audit to enterprise risk framework under enterprise risk. So we follow the same methodology to look at issues and dimension those issues. And we've increased our collaboration with risk and internal controls. And on reporting communication, we established standard IA metrics and dashboards, and we're also doing thematic risk analysis. So that the analysis you saw early on, the 3 areas, that was actually through using the thematic analysis we implemented through technology to be able to really go through the 40 plus audit reports, and the tool really telling us what's really kind of standing out. So that was a direct kind of output from our thematic analysis, which we built through technology. So what's next? Next is advancing the use case of AI and automation, furthering operationalization of our CAU model, and develop a fully integrated aligned assurance function with risk management, and continue to enhance reporting and analytics. So these 4 pillars are not just work streams; they are how we are building a best-in-class internal audit function, one that fits for NYPA scale and complexity. Just briefly, wanted to share, before I close, I wanted to share where we're headed with AI, because this is an area of strategic investment for internal audit. In 2025, we built the foundation. The team trained on AI, launched initial tools, ran pilots. In 2026, we moved from experimentation to scale. 3 milestones which are coming up. One is the RCM, risk and control generator. So every audit requires a risk blueprint. We call it the risk and control matrix. That's really all the risks, all the controls, all the procedures. And this maps what risks and controls should be in place and should be audited. Today, we build these manually, but this tool will automate that process. It will result in faster planning and greater consistency across teams. So the RCM generator is going to be really kind of looking at what is there out in the industry. From if we're looking in an audit, say we're doing audit in operational or third party, it will tell us what are the procedures you need to execute, and it will look at the prior audit results as well. Prompt library, think of this as a curated set of AI instructions or auditors can use to perform work effectively. So this is standardized, repeatable use of AI across every engagement. Agentic upskilling, this is a role-based training that teaches our team how to use AI agents, tools that can perform multi-step tasks autonomously. And this ensures that AI moves from just not an occasional tool to a daily habit. That really concludes my presentation.
So what do you see the benefits of AI for the AI for the IA function?
Yeah. I would say, I think, more deeper reviews, we're able to use data more comprehensive. So you think about in the past, right, we would sample across, we would get a file of, 50,000 records. We will sample maybe 100 transactions. Now we can actually scale and look at all those 50,000 transactions, look for anomalies. So that's really the benefit of AI, where we're able to kind of, really use machine learning to look at anomalies. And, another benefit is obviously work papers we document. Right now, we can switch on Copilot on our Teams call, and it will give us a transcript of what was discussed. And we would have those notes in front of us, and we can use those notes to put them in our work papers, and it will actually generate the work paper for us. So I think it's reducing a lot of the manual work, and also getting more depth in terms of the testing we do. So the testing would, really, in the past, we would not maybe catch some anomalies. Here we have a better degree of confidence on seeing some of those anomalies because we were looking at 100% of the population.
But going back bigger picture to 43 versus 42 projects and utilization, and so you don't foresee it, at least at this point, enable you to do more work, expand your scope, do the work you do more efficiently, fewer resources, just bigger picture. So I get the depth and the efficiency of a given project, but in bigger picture, what benefits do you foresee?
I think we can do more. I think on each audit, we can scope in more areas, I would say. If we were to do maybe looking at 10 controls, we can do 20 controls, right? Because we take a risk-based approach. I would say, it delivers the value to the business as well, because we're able to build some of these insights and share that with the business. Well, they can actually adopt some of these. For example, we did a project on customer billing to generation, and we were able to kind of build some analytics and pass that on to the business. We had done that for invoice review. So some of that is, I think, going back to the business to provide that strategic value to the actual business, where they can look at some of the analytics we do and we can pass it on to them. Like, we don't want to keep it a secret, right? We build something where it improves the control environment. We expect them to maybe take on, and we are happy to pass them on the code and how we generate some of these results to benefit the business.
It'd just be interesting to know, maybe the next time you're back with us, as to what you've actually seen the impacts, to be, and how we can further lean into that. Yeah,
one of the things, Chairman, and that's a great point. We are planning for the strategic initiatives we talked about. We're putting on KPIs and KRIs. Right now, we're working with amongst the teams to really measure success on some of these efforts, right? So, for example, innovation. How many audits did we use analytics on? What was the results? What areas did we see? So some of that, I think in the next meeting in July, I'll share with you with some of the KRs and KPIs we have put together, which will, I think, give you some insight in terms of how we're measuring ourselves, right? So right now we have the broader initiative defined, but we need to start looking at what the benefits and what the output is for the team. And that's something which is in progress.
Okay, thank you.
All right.
Any more questions?
Any more questions? Welcome. Thanks for the dialogue.
We need a motion for this to pass.
Yes. Thank you.
For a motion to pass the 2026 internal audit plan.
So moved.
Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion passed.
Thank you.
Okay.
Thanks, Salman.
Next up is Adam Barsky, Executive Vice President and Chief Financial Officer to present next item.
Good morning, trustees and NYPA colleagues, members of the public. Just providing a summary at the end of the year-end results. Obviously, we've followed that very closely last year. Takeaways here is that really no difference from what we last reported to you as far as the end result of our net income at $282 million, which is a very strong year, probably one of the best we've ever had. So that was a really good result.
Probably, or the best.
As far back as I can recall. So you're going
Well, it's notable. I mean,
Notable.
yeah, you know, worthy of at least recognition, if not celebration. So.
Yeah, and I think the other takeaway is that as we went into the budget, we see that this is something we're rolling into the out years in terms of continuing this. So it was less of a one-off and some good underlying
Level.
trends. Most of that is driven obviously through the operating income. So it's not driven by non-operating results. So in terms of quality of earnings, it's strong as there as well. But again, just really putting a fine point on really no changes from what we've communicated towards the end of the year. You'll hear from KPMG, the auditors, on their findings. But as far as we know, there were obviously no material findings or adjustments that needed to be made to the numbers as we went through the close and the final audit. No other material findings or significant deficiencies noted. So all good on that front. And we don't really look at the balance sheet often, but at the end of the year here, again, strong balance sheet, strong liquidity, all measures very positive. Really no major changes that you wouldn't otherwise expect. So we see an increase in capital assets because of the investments we've made in our capital assets or our capital program. There was a change in cash, really a result of spending the money we raised from our bond issue and also paying down some of our short-term debt to create some short-term headroom for liquidity needs in the future. So all of that, not surprising. Everything increased in terms of because of energy prices being higher. So, higher revenues, higher purchase power. So all that was expected. But anyway, any questions on this? And obviously net position increases from year to year. That's sort of our proxy for equity. Increases by the amount of the net income. Debt to equity ratios remain stable. And, the big news on the income is that it increases our ability to borrow in the future. So it creates a borrowing capacity increase as a result based on our financing plan. So any questions on this?
No, I just, again, compliment, but I always think it's good to see it grow stuff. We don't, you report, on an ongoing basis, I'm backing it up to the P&L there, just on operating risk. So yeah, $4 billion, operation, and on the balance sheet, 12 billion, just short of that in assets. It's not a mom and pop show. This is a significant, organization. So kudos again to you, Justin, the entire organization. So very well done.
Okay, with that, we'll this is just some of the variance analysis that I just spoke about earlier. Nothing major here, and
so no real changes from anything you've previously reported. Got through the audit, as we'll hear, in good shape. So great.
Yep, all pretty good. So if no other questions, we'll move on. I'll turn it over to
Need a motion for this,
okay.
right?
Yeah, you need to accept the results.
So moved.
Second.
All in favor?
Aye.
Motion passed. Thanks, Adam.
Thank you, Chairman.
Okay, now I'll ask Chris D'Angelo from KPMG to present the next update.
Finish on a roll.
On a roll.
You're the man.
Way up early too. You slept late. Huh?
I had two calls before this.
Morning, everyone. Morning to the committee, trustees, management, YouTubers. My name's Chris D'Angelo, partner with KPMG. Nice to speak with you all this morning. With me is Ryan Gibbons. He's been here before, senior manager, manages the engagement team. Also here is Nick DiVirgilio. He's an audit partner. He recently joined the team, wanted him to join the meeting as well. We're a bit of a unique situation. Our audit's done, maybe ahead of time. Maybe that's the theme for this meeting. We issued
You
our,
could have done more too.
I don't know if Justin and Adam would appreciate us doing any more than we already did, but so we issued our audit reports on Friday. So this is a bit of past tense. So happy to report we issued our unqualified reports. Worked great collaboration with Sandeep and Adam and the team as usual to get through the audit. And it, as been alluded to, there's a lot going on at NYPA right now. So commendable that we were still able to pull together a high set of financial statements, get through our audit timely, quickly. So that it speaks to the great collaboration with NYPA's management team, accounting team, working with our team as well. Ryan will take you through the slides here. A lot of this is required communications. We delivered all of this already in conjunction with our audit report. That has to be communicated as part of the audit report itself, but still want to take the trustees and management through our audit results, and more than happy for Ryan or myself to answer any questions that you may have.
Thank you, Chris. Morning. So yeah, I'll take you through some of the required communications, but first I just want to put a strong emphasis on our confidence in our people and our platform, working, collaboratively with management and leveraging some of our AI tools as well, just to, provide not only a quality audit, but an overall, happy KPMG experience. Next slide.
Is that a commercial then? We'll bring with a commercial. We have a commercial break.
Yes,
before we even get
absolutely.
going? Okay.
So as Chris mentioned, we did issue our reports on Friday, on the 27th. So this is more of a past tense. We issued our independent auditors report, all clean reports, our report on internal controls over financial reporting, which is more often referred to as the Yellow Book opinion, as well as the report on investment compliance in accordance with New York state law. Next slide. Now I'll take you through some of the required communications. Next slide. So happy to report no significant unusual transactions, no uncorrected or corrected audit misstatements identified throughout the audit, no material significant non-GAAP policies from management, and no real changes to our risk assessment or overall audit approach. I'll take you through some of these significant accounting estimates on further slides. No additional related party transactions to note. No going concern issues, subsequent events, nothing really to report at this moment. No significant findings or any other disagreements with management over the course of our audit. Next slide. Just some additional ones, no consultations, no illegal acts or suspected fraud were identified. As Chris mentioned, we provided you some of these written communications as well. And as of today, we are required to affirm to our independence, not only the engagement team, but other members of the firm. So we have complied with, all relevant ethical requirements as we see fit. Next slide. Just another slide to add. This may look familiar. We include this just to further emphasize our internal control related matters. While we do issue that Yellow Book opinion, we don't issue and express an opinion on the effectiveness of internal controls, but just whether there is internal controls over compliance of financial reporting. As mentioned, happy to report no material weakness or significant deficiencies identified. Next slide. Sorry, next slide, please. As you may recall from our planning meeting, there is a significant risk identified at all major entities on the management override of controls. We mitigate this risk and address it through examination of journal entries throughout the year and rolling forward, specific general ledger accounting, as well as inquiring with members of management, just ensuring there's no accounting bias or any other significant unusual items. Next slide. The significant accounting estimates remain the same year over year. We do have the post-retirement benefit, otherwise known as OPEB plan. We confirm with management's third-party actuary, as well as engage one of our own KPMG actuaries to test the relevant assumptions within this estimate. Happy to report no significant findings in our audit thus far. Next slide. Next is the pension through GASB 68 through the New York State Local Employees Retirement System. Same thing here. We engage our KPMG actuary to provide an analysis over the significant assumptions and other inputs. No issues found with our testing over participants or any other assumptions. Next slide. And our last significant accounting estimate would be the marketable securities, which we are required to present as a significant accounting estimate, just at investments at fair value. No issues here. We price 100% of investments throughout the year. And in line with the investment compliance audit, we also do additional testing over the investments portfolio. Next slide. So now the next couple slides are significant audit areas. I'm not going to go through word for word our procedures throughout the year, just because they haven't changed much since the prior year. The only thing to note is we're each day we're getting more efficient and leveraging some of our other AI technology to further enhance the audit quality. So the next three slides, we have long-term debt, capital assets, and revenue. Just some of our procedures throughout our audit. So you can skip 2 slides, I believe. And the following. And this slide may look familiar as well. We'll just close out with some of our required inquiries. These are the inquiries we ask of management and significant other members of NYPA. And we ask the audit committee just to review some of these, and just whether there if anything comes to light, feel free to reach out to Chris or myself. And that will conclude our presentation. In the back, we have an appendix just including some of our non-audit services we provide to the authority, as well as some of our AI insights with not only our engagement team, but some of the other firm initiatives. Thank you. Any questions?
Any questions?
So this was a yawner. This was a layup.
Is it way up?
Yes, very good year.
Nice. Kudos. Good work, everybody. Yeah.
Thank you very much.
Indeed. Way to go.
And we'll do executive session.
Yeah. We'll have it at the back end,
After a
right?
minute, yeah.
Yeah. Thanks, guys.
Okay, the consent agenda is now before the members for adoption. I'll ask for a motion to approve the consent agenda.
So moved.
Second.
All in favor?
Aye.
Opposed? Motion carries. Okay, I'll ask for a motion to amend the, no, that's not it. I ask for a motion to amend the agenda to hold an executive session, to discuss the financial credit and employment history of a particular corporation.
I'll make a motion.
Second.
All in favor?
Aye.
Aye. We're in executive session. Thank you. Motion carries. Okay, I'm now going to ask for a motion to resume meeting in open session.
I'll make a motion.
Is there a second?
Second.
Aye.
All in favor?
Aye.
Motion carries. Now that we're back in open session, I'm going to ask for a motion to close the meeting of the audit committee.
So moved.
Next, no, wait, John, wait. I want to tell you when the
Apologies.
next, I want to make sure you're here. Next meeting of the audit committee is scheduled to be held on Tuesday, July 14th, 2026. I'll ask for a motion.
I can't wait, but so moved.
All in favor?
Aye.
All opposed? Motion carries.